Hello traders, it's John from Trader Growth. I hope you're having a fantastic day. I would like to go over today's trade on oil. We're trading WTI West Texas crude /CL. We are in a new front month contract. We're now trading May deliveries. You'll notice the gap in the chart. You can ignore the actual gap. We'll talk about trading here in the session and what you should be looking for and the type of trades that we're going to be taking in the Mastermind Trading chat room, where we're going to be teaching not only, entries and exits, but why and how you should be taking these trades, because that's more important than just buying and selling, but understanding the reality of the situation. So I brought up a 1 minute chart, but let me back it up here and we'll go to a 5 minute chart. It's less candlesticks and it's just a little bit easier to look at. So we have here this overnight trading session, which is oftentimes referred to as the Asian session. So we have our Asian session, and we're still under a whole dollar spot. So in oil, you always want to be looking at, whole dollar increments. So 58 to 59 is our current dollar range that we're trapped in. And we sell off, with some heavier volume earlier in the morning as we get towards the New York session. As the New York session begins to open, we see some heavy volume that drives price up. And we're waiting to take trades at key levels. There's a couple of places you can trade. You can trade over this 58.80 level, but this only looks significant with this price action here. Prior to this development, when you're actually trading this live, which is what I talk about a lot, you don't necessarily have the benefit of seeing all of this price action yet. All you see is this. So you think, oh man, it's going to the moon, let's get in at 59, and that's, really where a lot of people are going to get faked out. And you can't necessarily take this 58.80 because there's no real reason to take it yet. However, when time advances in the trade throughout the session, we can see before this explosion happens that price comes down into this area of previous support from earlier Asian session. And I'd like to talk to the key reason and how you get into these trades is the most important part of understanding, making profits in the market, and being successful is being anticipatory in your entries. So a lot of people will try and buy this dip somewhere down in here, which isn't necessarily a bad idea. But when we're in a market that's as strong as we are now in oil, even though I am fundamentally and personally bearish on oil as a whole, I understand that the momentum in the immediate term is to the long side, because we've broken out of a previous daily range that I was talking about on Instagram for a while. I showed some pictures. I'll change my set here. But we had our previous range that we were trading in, and we had this beautiful hammer candle here, which I had a nice profit to the short side this day on the challenge account, and then I took another short and I got stopped out. I believe it was break even or a small loss. Hammer here that formed on the daily with a decent amount of volume and then some bullish price action after that. When we get out of this range, I'm looking for an expansion in price. I'm always looking for expansions in price. So as long as we're above this range and we're trading well the way we are, then I'm going to be looking to get breakouts. I'm going to be trading breakouts, particularly over the previous day's high or close, and over a whole dollar, which is what we have today. So let's jump into the 5 minute chart and see, okay, let's jump back in and see how does this actually work? How do I actually trade this? Well, let's change our lines here for what I had so we can bring that back up. And you can see now that we've pulled back, and you need to have a very good understanding of price action, anticipating moves in the market, and looking forward without having forward information. I know that's a mouthful and it sounds a bit wordy, but with the idea that you're going to buy a high of day break into a trend, there's a way to do it. There's only one way to do it, and it's a limit order above the high of day. So we know we've put in a high with some liquidity probing above 59. So anywhere to enter above 59 after this pullback is for a push to new highs. Typically speaking, when I take this move, I'm looking to have an entry, which is where I entered at 59.08, which is just a few ticks above the previous high. I'm looking to stay out of the noise of the market. I'm looking to stay, which is these candles. This is all noise to me. This is a non-liquid market where there's probing and failure, probing and failure. So as price trades through, you say, man, that moved fast. And it did. It moved incredibly fast. And the reason why it moved fast is because professional traders, whether you're a desk trader or you're a full-time at-home retail trader, we are looking to buy with a predetermined price level with an order that's already in the market and pending. When you see me post on Instagram and I say there's a pending order, the reason why I put a pending order out is because you cannot react fast enough. We'll go back to the 1 minute chart that I had, and I'll show you just how quickly the volume comes in when we push through key levels. And you know you're in a key level when you get confirmation of volume. You know that other traders are looking at that same level with a similar idea. So as we break up, we have on the 1 minute chart, you could say, well, you got a double bottom. You can try and play that game if you'd like. I don't care about that. All I care about is, are we going to make a new high and can I get in? So very quickly we bounce, and as soon as we break, you'll see the volume in here is low, very low in this 1 minute candle, right? 1,000 contracts traded, and then the very next candle with volume as we make that break is almost 4,500 contracts on that 1 minute candle. Well, you obviously can't get in unless you have an order already pending. That's how fast price moves. So you have to have a limit order in to buy at a particular price when in this type of market environment. You could have also bought either this pullback, which is a little bit dangerous, or the secondary break, which you'll see a ton of volume comes in on that candle as well, because the next strategy is buying the breakout after the first 1 minute pullback. That's a very valid intraday strategy. It works on momentum stocks. It works on momentum futures. It works on options. It works on any basically instrument that you can trade where momentum is a valid system. Nonetheless, the idea is get in, ride it to either the nearest chart resistance, which in this case we didn't have, ride it to a pivot, or in most cases you'll see a lot of my trades where I'm taking profit or entering half dollars and whole dollars. They provide natural psychological resistance to the market and natural profit targets to the market. So that's really it, guys. You can get in on a really good trade like this, and this is how the market keeps making new highs. Because every time you push to a new level, there's a bunch of people waiting to buy, and they get absorbed, and the market just goes. Because I'm willing to offer it higher once the market has proven to me that it's ready to move higher. If for some reason we break under this 58.80 level here, and I never get filled, then what's essentially happened is I've kept myself out of a bad trade. What a lot of really amateur traders will do, they'll look at this 59 spot and they'll say, okay, I'm going to get in here before the market's really proven itself. And you're probably somewhere in this range, and you're either long or you're either short, and you're really in this area where nothing's happening. This is where everyone's getting chopped out of this trade. This is where everyone's losing money. We break lower, that people are having to cover. We push up, we push down. These are $100 moves in here between 58.90 and 58.80 per contract. On 10 contracts, there's $1,000 of price movement in here. There's not everyone can afford to hold through that sort of movement when you're an intraday trader. So finding areas in the chart that offer good opportunity and then putting orders in and keeping yourself out of bad trades is more importantly. Because to my initial point, if we get to this 58.80 level and for some reason, let's just say, for instance, price just flushes a few more ticks lower, and all of a sudden now there are no buyers. The algorithms switch because we crossed under a moving average, or any number of circumstances could happen in this area. So by having my limit order in this area to buy as the market takes me in, it would have avoided me a bad trade had price not broken down. Whereas an amateur retail trader will buy in this 59 area and wait and either get stopped out here or when it flushes be in an incredible amount of pain. Whereas I'm looking to buy this trend. Why on earth, if you're intraday trading, would you expect anything other than this to continue? You know, you've put in a low of day, you haven't retested low, and you've stopped at the whole dollar. So these are all things that, guys, I don't mean to ramble on, but these are things that I want to go over in the chat room in detail, very clearly, live as they are happening, so that students understand why to take these trades. Not just necessarily that we're taking them, but why. So that way, one day when you're on your own, at your own home office, you can take trades with confidence and understand that you're seeing what a lot of other traders see. The number one tip to keep in mind with this setup, two things I'll leave you with. Excuse me, not one, but two. Have a limit order in the market and get comfortable with buying and selling at a price that you believe in and that your system has confluence in. And when you see volume, there's a reason why traders use volume as one of the most key indicators. It means that there is many, many, many other traders, whether retail or institutional, looking at the same area for a similar reason. And if enough people are looking at that area and doing the same thing, there's no shame in just getting on board. All right? You don't have to be contrarian all the time. You don't have to be a superstar and be doing super things that other people aren't doing. What you have to do is do simple things and keep yourself out of really bad decisions. I hope this video helps. I'm going to try and do more of these, and then in the chat room, obviously, we'll be doing a lot of this live in anticipation of getting these moves and these breaks. So if anyone has any questions, comment, shoot me a message, Instagram, Facebook, my email, head to the website. There's plenty of different ways to get in contact with me through Skype. Either way, guys, I hope everyone is well. Thank you very much. I hope everyone has a great day. I will see everyone very soon. As always, stay hungry and humble. Thank you.